Welcome everyone to Price Action Live here at Traders Pulse for July 17th, 2025. Do you guys feel it? Do you guys feel the market just waiting to give you money, waiting to make your future better? That's what it's all about, folks. It's about trading the markets, trading ourselves in order to make a better life for ourselves, our family, and our friends. Mike, Trevor, are you guys ready to demonstrate to the people expert level trading so that they can learn from the best?
Always.
Yeah.
I'm hoping to recover a little bit as well. Yesterday was kind of a down day for me.
Well, as somebody who's been long Bitcoin since yesterday, that was a poor move. I try to get into the trade. I start at 6 p.m. 6 p.m. is when I get in my positions. I'm too paranoid at 9:30, and it's been down ever since. So that's been terrible, absolutely terrible. But I'll take it. What are you guys trading today? You're looking at NASDAQ, gold. What kind of setups are you looking for?
Both. I'm going to see if there's a good setup here. I'm waiting a couple minutes from the open. Just posting a quick tweet, and let's go take a look at what's going on here. So it looks like we gapped up just a little bit on NQ. Again, tiny little gap up. This seems to be a consistent theme here where we get these tiny gap ups on NQ. We pull back a little bit and then rally for the rest of the day. But we are in a support band right now on the 2-hour chart for NQ. So I'm expecting this should be a long day. We'll take a look at the VWAP to close strategy and see if that's going to take a long. If so, then I might do a few little scalps here and there, but otherwise it's going to be kind of a slightly small day for me. At the same time, I'll take a look at gold and see what's happening there. Gold had a pretty big gap down.
We had that dollar move off the lows that, well, yesterday was a volatile day for the dollar. We had the rise and then drop, and then it wicked severely back up. So it's been pretty whipsawy.
Yeah, that was interesting to me. I thought we were going to reverse out of this trend. We had talked about the dollar maybe touching about 99.20, some around there, and then maybe reversing out. And I thought maybe it was coming a little bit early. So I still think there's some potential of the dollar rising slightly higher from 98.7 right now to 99. And if that's the case, obviously that's a pullback in NQ. Okay, I think I'm going to take a look at what's going on with NQ here first. While gold seems interesting, it's a huge gap down. It's already trending down. I'd like to see how it responds to its support level of 33.06. So there's a little bit of room from here to here, about 12 points of movement, but not enough for me to get too interested yet. And also it's just not the right setup. So I'm going to go back to NQ. Take a look at what's going on with this bearish open. I think if we continue to break down from this anchored VWAP, which could be serving as support now, which was previously resistance, I want to see if we can continue down from here.
After yesterday, I'm treading very lightly on anything, really.
Anything.
If that just shows what the market's reaction would be if Powell would actually be fired, it seems a little crazy.
Not permitted under the law.
Yeah.
When's his term up? 2026?
May, I think.
getting a new federal chairman is like getting a new Doctor Who. It's all very exciting. What's going to happen? Who's it going to be?
Okay,
We
I'm
have this
quietly
topping-
constructing a little short here. I'm going to keep the risk pretty tight on it.
We had this
because of
topping tail on Bitcoin yesterday. I should have paid more attention to it, where the candle was just brutal, just talking about a low, and the idea that we might go back down now to 113 on Bitcoin. It's definitely in the cards.
You think a continuation is there?
Possibly. I mean, we're on a breakout of a breakout for Bitcoin. So it's a 1-year trend breakout over a 4-year trend breakout. So that's why altcoins are just rallying and we're getting a big move. But it doesn't mean that we can't still get like an 8% down before we rise up.
Copy that. Yeah, I'm thinking 109 might be possible on Bitcoin if it's going to pull back further. All right, so far in profit just a little bit here on this M&Q short. I'm going to see if I can add to this position here if we break a little bit further. I think the downside is if we break through these anchored VWAP levels, but ultimately I could see price pulling back to about 23,000 on NQ if I'm right about this direction, but we're just going to keep an eye on it. As I've been saying for weeks now, the bulls like to step in all kinds of interesting areas, and I'm always waiting for them to surprise me. So I try to keep risk really, really tight, unless I go a little bit on tilt like I did yesterday. I was not in the right headspace yesterday.
Just want to make sure we give a shout out to Adventura Trader. Thank you so much for being here. We always appreciate it. What's your trading been like? What's your portfolio like, Adventura? No numbers. Just is it good or bad? Are you taking advantage of this market?
Yeah, definitely curious what Aventura has been up to.
Yeah, we don't even know your favorite asset to trade or even time frame. You got to give us that.
Or your real identity.
Just docs in the live chat. I don't see Bitcoin going down to 109 because we already touched the 109 level, the VWAP level. So once we clear it, once we mitigate it, that to me is like we're gone. The level below that is 105, but we generally don't go down to a level on Bitcoin that's beyond a level that's already been mitigated. So to me, at most, I would say 113. But let's see.
Got it. That makes sense. If I pull up my 2-hour chart, which I'm using, mainly for just futures, I just keep seeing this support zone, this green band around 116 as well. So maybe that is the first place it retests.
Right. Are those bands order blocks or fair value gaps or?
Neither. They're just evaluations of wicks and ranges of wicks looking back over the last 500 bars or so. So it's basically just the same thing as visual support and resistance. I don't even think volume is incorporated in that indicator.
Okay.
Okay, good. I was worried about this little uptrend right here, but it looks like that's starting to weaken and my downtrend is starting to improve. So it looks like my short is looking pretty good. We're now a full candle below VWAP from the open on the 1-minute chart. Looking at the 5-minute chart, we're below some of those exponential moving averages, and we're about to retest that anchored VWAP. So I want to see if we can actually break that potential support at 23,066. But the bulls are really going to test me on this.
Aventura says he's a NQ trader.
Yeah, I saw that.
Man of mystery. Nice.
Dang. All right. So that's some of that bullish volume I was expecting to see here. Looks like I'm going to have to start tightening my stop loss and getting prepared to jump out of this trade. I don't want to risk too much. But I do want to see how the market responds to yesterday's high. So this red line right here represents the overnight high, and we'll see if that serves as any saving grace for my short here, but my guess is probably not. So let's get out.
As far as the dollar is for me, we're now hitting a zone here where I would expect a big reversal. So we'll see. I'm expecting, I'm hoping, so that we can get an up in Bitcoin and equities. So if this is where we end, and we're going to start moving back down towards the lower end of the range to 96, the lower ends of 96, that'd be great. If we're breaking up above here, wow, everything's going down.
Got it. All right. Well, that's a pretty clean bullish candle above VWAP now. So I'm going to try to reverse my thinking and maybe take a long from here from this support band. We'll start to build a position.
Ripper.
We had the jobless claims numbers today. So we're continuing jobless claims. We're at 1956, and that is above expectation, but not very far from forecast. Same thing with the initial jobless claims. So we're not seeing any hair on fire. Any big,
yeah, I also saw retail sales were up to 0.6% versus a forecasted 0.1%. That's pretty promising.
What are we getting tomorrow? Okay, nothing good. Are you guys participating in any of these altcoins that are just starting to rip?
Not here, no. Crypto, I've been so wrapped up in the prop firm trading side of things that I've just been letting my long portfolio just go crazy. I've got some decent positions there, mostly from my box trading approach and value investing analysis. So I haven't even been looking at that. In fact, I need to get prepared to start analyzing some of the 13F filings and see what I want to add there. But that'll be a weekend project, and then I'll pick up some trades on that Monday, and then go from there. But I haven't really been exposed to crypto for a while now.
I said to my wife this morning that I was just like, I don't have crypto, and I don't get it, whatever. And political stuff aside of just whatever, it's hard to not be like, oh fuck, I wish I was exposed in some capacity. But these people have been in the trenches, for years of sleepless nights, and I guess they finally get their payoff. But who didn't own Bitcoin? I mean, I bought Bitcoin at $1,000, sold it at 600. What an idiot! I bought the top and was like, well,
I read about Bitcoin in 2012 and bought a little Bitcoin back then. I even mined a little Bitcoin back when we were talking like less than $5 a Bitcoin. There's just no way you could have forecasted where it was going to go back then. It was kind
you
of
you would have sold it and panic sold it at
for
10,000 and then bought a house and been like, that was fun.
The only thing I can think of is that if it were a more established asset class and had the derivatives market that it has now, I may have held Bitcoin through all of its pullbacks and just traded put options to protect against that downside. And then all the money made on those puts would have been plowed right back into buying more Bitcoin. That would have been the right strategy over the long run. You would have wanted to hold as long as possible on that. But man, that those initial returns are long gone. We're at a point now where Bitcoin's annual returns have started to wane. I mean, it's still a high risk asset and it has better annual returns than other assets, but it's nowhere near what it used to be. There were years where it was like 1,400% return.
That's why I like the leverage plays on them now. And even like,
I think that's what's driving a lot of crypto traders into futures is they want those high risk reward propositions again.
It's almost like getting a you're taking advantage of the lower volatility of the asset in order to really leverage it up, because when you're doing 2,000% increase from like 2012 to 2017 or whatever, how could you ever take any leverage on that? But now you're like, you can, and it makes me feel like it's too juicy not to take advantage of it, because you have this sort of predictability of what goes on with Bitcoin. You're still getting the high beta on global liquidity, but a cleaner expression of it. However, now with the whole prop firm thing, it's like, well, I actually could take less risk by account scaling with prop firms than I can leverage trading on exchanges. So I'm not exactly sure which one I like better right now. It's actually tied.
Yeah, that's the tough part. It's hard to really kind of spread your attention across multiple things. I think the one thing I would need to get more involved in crypto is a decent working strategy there again. I had a pretty good one working in 2017, back when there was a lot more inefficiency in that market, and it was a bid-ask order imbalance ratio strategy that looked for big order blocks on either side, and we'd either take a long or exit the position. There wasn't a lot of short selling back then. There wasn't any margin support that I could find, especially for US citizens. So it would basically just go long if there was a big order block on one side or the imbalance was way off on the buy side, and then exit that position when it was imbalanced on the other side. And that actually worked really, really well for a while, right up until the big sell-off of December of 2017.
Right.
I mean, you also need money that you don't care about too.
That's also true.
Well, my rule is always bet on the Ponzi scheme.
No, the rule is you don't want to be the last one in the Ponzi scheme.
That's right.
You got to get in the middle somewhere.
I think the rule too is like, be careful in the very beginning, because I had money on BTCE and Mt. Gox, and these are platforms where a lot of people lost a lot of money. I was fortunate enough to move my Bitcoin off to a cold wallet. At that time, actually, the quickest and cleanest way was just to print it onto a piece of paper. So I printed a paper wallet and got everything moved off in time. But I know a lot of people that lost a lot of funds through that process.
Yikes.
I still don't understand that, like the cold wallet stuff. So like, if someone has the key, then you're screwed. But like, can someone hack it? It's just like, it's not there. It's not. That's the part where my brain just dies.
I mean, in theory, yeah, the secret keys could eventually be hacked, but it's going to require some advancement in quantum computing that would allow that kind of thing. The complexity of the key is such that it would take many years to unlock them. I do think eventually it's going to be interesting if we can gain access to all those secret keys and wallets from the early days of abandoned wallets and abandoned Bitcoin, or people who lost it. Like, isn't there that guy who's still searching for his Bitcoin
he's trying to buy it for $1 billion now.
It's in a landfill, and it's a whole lot of Bitcoin that's valued at tens of millions or maybe hundreds of millions now. Oh, there it goes.
Yeah.
All right, let's take a look at this. Cool. So I got an alert to go long here on the VWAP to close strategy.
Aventura got stopped out. He's crushing it overnight and giving it all back at 8:30 a.m. I know the feeling. I know the
Yep,
feeling.
it happens. Come back and wait for the next opportunity. So I'm reading this book right now, Trading in the Zone, which is an older book, but it's fantastic. And it covers a lot of the psychology around trading. And one of the things that I really like that he covers is making yourself available for those opportunities, being capable of sort of letting go of what happened in the past and just focusing on the opportunity flow that exists right in front of you right now. So you can very cleanly move in and out of the markets without having too much of that historical emotion. It's sort of like roulette, right? Where the game has no memory. It doesn't matter that there was 7 reds previous. That doesn't increase the odds that it's going to be black on the next play. It could go red for another 14 rounds if it needed to. But the idea of just being able to play the odds for the next trade, looking for that best setup and kind of forgetting about the past, super helpful. Good book overall. He covers a lot of just great rules to cover when it comes to thinking about risk in general. Yep, Aventura says Mark Douglas. That's right. He's the author of that book. Highly recommend it. In addition to the one that our friend John the Farmer recommended, which was the Best Loser Wins. Another great book.
See, the problem that I'm having, this is going to get a little esoteric, but the problem that I have is that since I've come to terms with my own mortality.
Oh God! Wow. Okay.
That means that
All right.
worst
It's getting
possible
deep real quick
situation.
here.
What the worst
Money isn't
possible
real,
scenario-
so all in.
the worst possible scenario I'm like come to terms with, and so the worst possible scenarios in the markets I'll take. I'll be like, well, I'll blow out an account. I'll fail here. I'll go all in because the worst case scenario is that I just lose everything that I have, which I feel comfortable with. I don't know how to like undo that, but like, how do you walk across the tightrope if you're okay with falling off the tightrope?
That's a tough one for me. The idea of losing everything is not something that I can conceptualize. And I know you and I have kind of rallied back and forth on that concept. For you, it's almost satisfying if all the money is gone because then you're not thinking about the trade anymor, right?
It's just the relief.
Yeah, I can't. It's hard. I can't get my mindset on that. That doesn't work for me because for me, it's like I really beat myself up if I don't trade by my rules and I end up losing more than I expected. Yesterday, I think was an average of I was down 747 across most of these accounts. And that, most days that are loser days, I want them to be between $200 and $400. So I'm a little over on that pullback. I'm still up on the week overall, which is great, but still I'm pretty hard on myself about not managing risk because that's, in my mind, the one thing we have control over. We can't control when the market goes our direction. If it does, we can control when we decide to get out. And I try to hold on as long as possible. Follow the trend until the bend in the end, as they say. And on the flip side, on the risk side, those stops can be tight. You can decide exactly when you want to get out. That's the thing you have control over. So when you deviate from those rules, it's really, you have to hold full accountability for those decisions. So I don't know. It's hard for me. Losing all of it would mean that I obviously violated every rule I possibly have on any of my trading approaches. Maybe you can help me unpack that one further though, Tom, because like you've mentioned that a few times now. And I'm like, well, so what's the point of risk management at all? Are you basically just saying I'm willing to bet everything for the potential that the returns are greater than that everything? If I have 50 grand to work with, I'm willing to bet 50 grand to make 100 grand. Is that what I'm hearing?
It's hard to explain. I can never bet myself. So there's always a potential of getting more money afterwards. So I never feel like I'm at zero. That if I'm at zero, then I got nothing. No, I still have me and my ability and my work and all that sort of thing. And then the times where I've made the most amount of money, I have multiple times made, to me, obscene amounts of money. And it never came from risk management. It always came from when that shot came, swing hard.
There's a
and
quote
the
that I
people
saw.
would have taken a little bit of a gain, and I took the whole thing. And that
Okay.
feeling of being there, of taking that swing hard, knowing how to take that swing hard, that's to me is what I like.
So is it more like your win rate might be like 10%, but when you have that one big winner, it crushes the 90% of losses that you have?
Absolutely. Just
swing for the
blows it out of
fences.
the park. Exactly.
Okay. What was the quote, Trevor?
The quote was, there are people that are 1/10 as smart as you, making 10 times as much money because they're not smart enough to doubt themselves.
That's
I
right.
think that there's a certain truth to that, of the hodl, and a normal person would have just been like, oh, I'm cutting this. This is so dumb. But someone that's like, I believe in it. I believe in it.
I'll buy it. I mean, watching people make millions of dollars off of Doge, it was one of those areas where I'm like, what am I doing over here in equities?
Exactly. All right, I'm trying to fix my mic. I'll dip out of the room. I'll be back.
Okay. Thanks, Tom. All right, so we're still long M&Q here. We're just kind of hanging on for this trade. I don't see any scalps at the moment. We're also long on the VWAP to close strategy. That one threw off a signal. It's weird, though. It's not showing up on the charts. What did I do wrong here? 17. The stop loss is there, but the order's not there. There it is. That's so weird. TradingView's been a little buggy lately with strategies. All right. So at this point, I had an additional order to add to this position, but it's just been going straight up, which is fantastic. I'll let that ride, of course. We've already eaten up most of the initial loss from the invalid short from this morning, almost back to break even here. So if we do see a little bit of a pullback and obviously continuation, I'll probably add to this position here and let it go long.
Oh.
All right, you guys see anything going on with any other assets?
Well, Bitcoin is bouncing here, starting to show bullishness exactly where I would expect it. Expected. I use expect when I should say hope. That's often what's going on there.
Next time, enter when it's at that place. Don't enter and then go, please bounce here. Yep, according to plan.
Okay, I see it. That's a nice
works.
bullish candle, even on the higher time frames.
The thing is that whenever I cut my position early,
what does the weekly VWAP tell you, though? Because it looks like we're almost up against that.
Or a weekly.
the weekly
bearish
VWAP is
divergence.
that's over here at 119.
I've got. Yeah, I've got 119, 150.
Yeah, so this zone here, I guess to me my stop loss was, well, I don't believe in stop loss, because when I
think we just covered that.
well, whenever I exit a position, I'm always then looking to get in again and again, and I keep getting stop. And I just go, when I go over my trades, I just go, if I just held the position for the full amount that I'm willing to lose, which is the whole position, then my stops get completely, like, it's fine. And then what happens is that it's all about my analysis of the chart. If my chart analysis says, hey, no, this should be bullish and we should move up, then I should just suffer the drawdown and make my way through. I don't like getting out and being like, okay, now I'm going to get back in and make it. No. Just.
I'd love to share that attitude with you. And normally I would in a spot portfolio for crypto or just a cash portfolio for equities. I can endure 30-40% drawdowns and still feel pretty comfortable about it, especially if I can add to my positions and have some cash on reserve to add to dollar cost average through those drawdowns. The trouble with prop firm trading here is that we can't have huge drawdowns in a single day. We're only allotted so much daily loss with many prop firms or the max loss limit inside the account. And if there's even a 1% move in the market, especially NASDAQ, and you're sized up pretty far, you're gonna get liquidated pretty fast or you blow out the account. So the inability to have drawdowns in the market is what makes this even tougher.
Yeah. So what I've been trying to do is understand what's my position size in size my position, because I never size my position so that it's huge.
Sure.
How do I size my position so that it's big enough that I'm interested, but small enough that what's considered a big drawdown still wouldn't liquidate the account?
Right.
But I'm never going to stop myself out unless the trend fully changes. I do not stop myself out. I just stay with it. Because it's so many times where I do that, I stop myself out and then it reverses exactly where I expected.
Yeah.
And I go, I'm getting liquidity swept. Just stay in.
I think that's where we're aligned. I definitely try to improve my ability to ride trends as long as possible. And I do feel like I leave some money on the table when I get out too early. And that's an area I'm trying to improve on, is really kind of measuring that trend. It's partly why I like the regression trend indicator so much, because it really helps me understand the boundaries of the relationship between time and price. And if it's a solid enough trend, it's going to respect those boundaries pretty well. Price will bounce off of the bottom or the third standard deviation of price, or it will reject off of the third standard deviation on an uptrend on the top. So, it really kind of stays within that band. I use 3 standard deviations because of the empirical rules. So like 99.7% of the data is inside of 3 standard deviations, but only 67% is within the first 2. So I do like having 3 standard deviations instead of 2. That way, you've captured kind of all of the movement of price for the most part. But that's helped a little bit. I think maybe I need to adopt more of that mental attitude for you though, Tom. Like, you just keep going even if there's going to be a big drawdown. Do you move a stop up to where like you would even just be break even, or are you willing to let it draw down even back into where you originally were?
I mean, I'll let my account get as low as a little bit away from blowing out the account.
Got it.
Yeah. I'll leave myself room for, if I were to exit here and enter back in, I could have one last trade. Work my way back.
I mean, that's why SPX is so bad, but so good. I would love to play out a scenario where you hold until the end of the day on 0 days, because I feel like those oh my god, I can't even look, where you would have made $10,000 would make up for the dumb ones. And SPX to me is like crypto. And yesterday I had averaged down into oblivion during that drop, and it's just like, what am I even doing? And it was one of those 3 tranches of different call. I kept lowering the what's it called, the strike, and then the good strike, the closest one, I didn't have any sort of limits on to sell. The medium one that was not as bad but still pretty toasted, I had put a sell at break even basically. And all of a sudden, when we were way low, all of a sudden it was just bling. I'm like, what the hell? How did it fill? And I looked at the price. It hadn't even it started to move, but it hadn't really moved yet. The option premium swung up before SPX moved, and it just went boom and hit me break even. It was like, sweet. And then I looked to the other ones and I looked at SPX and just went zoom up, and I was up $2,000, which just saved my entire year of horrible SPX trades. So I'm like, done. I'm break even for the year on SPX. I'm like, this is great. This is awesome. But like, if I would have held it, I would have made $5 or $6 grand. And that's horrible risk management. But like, the beauty of options sometimes is it's very similar to prop in that your risk is capped, but the upside is potentially unlimited if you somehow caught an amazing one. But the only reason that I made $2,000 was it happened so fast. I didn't have time to go, you know what, I better sell here to be risk averse, which I would normally do on NQ or any sort of slow moving thing. So it's tough to like watch it happen in what appears to be slow motion, and then 3 hours later you're like, if it would have held, I'd be up 100 points. I looked over and all of a sudden the ladder was up $1,800, and I'm like, sell. So I don't know. It's almost like I would love to do SPX like in pre-market, like before CPI or something, and just be like, whatever. I either make, lose $500 or make $5 grand. And
Exactly.
Well, I guess that's kind of the beauty of options in general, though, is that you can just let it go to expiration and just pay the premium instead of worrying about the drawdown in the middle. The drawdown in the middle on a futures trade, though, is a real thing. Unfortunately, you don't have that option of waiting till the end of the session.
That's why non-recourse leverage I find to be just beautiful.
Yeah, I'm with you. The options market is definitely very friendly in that way. We're playing one of the hardest games possible in trading, in intraday scalping or even intraday trend following. The odds are very, very difficult. I mean, obviously we see that show up even on the stats of the leaderboards for these top prop firms. We know that most people are really struggling at this game. It's difficult to do. It's difficult to manage risk. It's difficult to be right. It's difficult to find a setup. It's difficult to get past your emotions through all of this. Like, there's a lot of work involved in making this a successful process, and it can take people a long time. I wasn't always a profitable trader. It took me years to get to this, and I've been at it since 2017.
Have you ever had wins that were so big that you're just like, it was just outside of your realm of what you could possibly have hoped for or expect for?
Yeah, and that's when I started trading futures.
Meeting my wife.
Oh, classic.
Watching. It's Aventura Trader. Aventura Trader is actually my wife. Love you, babe.
For sure, though, I do think futures have allowed me to gain some wins that I would not have seen anywhere else. But it's the first time that I ever got involved in trading leverage. Prior to that, it was spot crypto and equities, and I never used leverage. So as I slowly started to understand how to manage risk around leverage, I started to size up. And in my cash account, definitely not in prop, but in my cash account, I was trading 5 to 7 NQ contracts at a time. So I'd have some fairly large days. There was one short sale day where I had made around 65K in a day. And that was just incredible.
Awesome. Would you ever go back to trading spot and for equities or crypto? Or is it like leverage now is like the name of the game?
I think that's the problem is now, I went and I got the certification for futures and options analysis. Like I'm definitely in the derivatives headspace now. Right. I love the power of it. I love the risk reward proposition. But it's definitely an area I've neglected because my crypto portfolios have done really well for a long time. Basically just blending market cap weighted cryptos as they make their way up the ranks, kind of looking for some of those rising star opportunities and adding those to the portfolio and just letting it ride. My approach with crypto has definitely been more of a balance out some cryptos, especially some ones that are uncorrelated to each other, blend the portfolio in an appropriate way, and just let it run for 18 to 24 months.
Nice. So this is flat here. Oh, so how's your trade going here?
Oh, sorry. So we sweeped up the losses from this morning. We're up 20 something dollars on the day. I still am only long 2 contracts from the time that I reversed out of the short and went long. I haven't been able to add to this position yet because it just hasn't pulled back enough for me to be ready to add to the position. So we'll just see if we keep going. This is a very slow open here.
Yeah.
But it's still following the trend.
I love that John shared that tweet from TrendSpider that Polymarket data is now available within TrendSpider.
Yep.
And it seemed like, I mean, you could read John better than I can. Does that mean like, hey, he actually is pretty interested in event data coming to Traders Post in some way?
So we need to add, there's a number of brokers I think we need to add a list for on Traders Post, a wait list. Because at the end of the day, we prioritize our broker integrations based on customer demand. So if everyone wants Kalshi or Polymarkets and there's enough people on the wait list for it, we will prioritize that accordingly. So I think that would be the next step here. All right, so we're seeing a little bit of a pullback here. That's actually promising for my trade. I want to see if I can average in and take a second position here. I'm looking at this overall uptrend since yesterday as well. We found a low yesterday.
I see.
And the overall uptrend is still pretty positive.
I just have a flashback to the days when I first started trading and I had no indicators. And it was just the size of the candle and how it moved, and I thought that's all you needed to look at.
Yeah.
And my God, just the mistakes I would make. Oh my God.
Naked charting.
It's doing price action trading alone. It can be difficult, but I know some people that can get away with it. It's impressive when I see people do it.
I just have no concept or just what's the word? Context. Even like if I was like could only have one indicator, it would be, TrendBot, just to see a simple uptrend, downtrend kind of thing. Because visually, just to look straight up at a chart, it's hard to go, oh, we're on an uptrend, or oh, that's a higher low. I used to have like a higher low, lower high indicator, which was fun to look at. But yeah, without that, it's just like
built in now to TradingView.
Oh, is it?
But yeah,
all chart patterns is fun.
Yeah,
the built-in one.
Following the chart patterns is fun. I've also found that just generally looking at the size of price and deviation of price is extremely helpful. So like my ATR indicator down here is really helpful for me because this is giving me a sense of how much price moves away from its average ATR with a multiplier of 2. So this is 2x ATR. And you can see just looking historically how the session moves in this stationary way where it vacillates between high ATR and low ATR against this moving average. And that's a very consistent process that takes place almost every day, where most of that volatility will show up at some point in the session and then we fall back to low volatility again. So that is super helpful because candles can be really deceiving on their own, especially since we magnify their size by using the auto fit data to screen, right? So the closer you are, the larger this candle appears in an absolute sense, right? How much space does this take up on my screen? But on a relative basis, how small is that candle compared to historical candles? So I think we have to think about measuring the size of candles a little differently, and it should be based sort of on their volatility range. What is typical for a candle move? How big are the candles typically for this asset? And is this unusual compared to historical candles? Definitely looking at like NQ on April 9th. That's an unusual candle.
Look at that. Well, my whole trading changed as soon as I keep saying it again and again. I must have said it to you 1,000 times, but Mike is the one who introduced me to VWAP, and it just completely changed everything for me. That with volume weighted average price, I feel like I get to see
that is VWAP. What do you mean?
Sorry, a volume weighted moving averages.
Oh, okay, got it.
And volume weighted average price,
Yeah.
and so I start getting this sense for the market of like I no longer get like distracted by what's going on. So, for example, over here for the Bitcoin futures, I'm not really worried about a big fall down because we are doing a consolidation over time, and with these moving averages that are here, we're less likely to get down to these areas.
Mm-hmm.
And we're just in a yellow trend area. That's what these are. So I have green, 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 and then yellow. So I'm expecting like a little tiny mini red somewhere here at some point. That'll just be like a little bit of it. And then as this price meets up with the volume weighted moving average, this is where I'm expecting to take off. Or a breakdown, but like it's around here, like later on, that I'm expecting any move to happen. Whereas before, I'd be so nervous at every one of these moves. Oh my god, here it's going to break out, here it's going to break down, here's going to break up, here's going to break down, and I no longer get like distracted by that sort of thing because that's not what happens. The price consolidates until it gets down to the moving average and then breaks. Either up or down. That's where it all happens. Here, the price came down to grab more, I guess, volume or whatever, liquidity, and then it moved back up.
Yeah.
So I very much credit. I built the whole indicator suite for myself based off of the Brian Shannon book that you, yeah, and then our talks for VWAP, and it just completely changed everything.
Have you made any headway on that concept around pivot point anchored VWAP?
I haven't adjusted it. I've just been doing the session one. Mm-hmm. I want to modify my existing set in order to account for that, but I have to find the time for it.
Yeah, I think that'll be a good one. That's effectively how I'm doing the anchored VWAPs on the 2-hour chart, is all pivot point. Just looking for the recent high, recent low in this range, and then building the anchored VWAP from that point. Now, if it's a sell candle or a reversal, that would be a red anchored VWAP, and if it's a support candle, then it would be a green VWAP line.
The problem I'm having with that is I actually had a previous version of my script that was doing that, but there was too many levels to look at. Like you can anchor it from all kinds of different points, the session high, the session low, the different pivots, whatever pivot lengths you have, plus then the normal day, week, hour, whatever. And then I couldn't tell which levels to pay attention to. I was just too, I just couldn't tell. It's like having too many moving averages. Some people have like 20 moving averages on their chart. And I go, well, which moving average are you paying attention to at any given point? So I couldn't figure out a way of like how to determine which one of these anchored VWAPs I should pay attention to. But when I switched to just the session, the day, the week, that already cleared up a bunch of stuff. I knew if I was bullish or bearish. I knew what the bias was, and I didn't have to worry about the but now that I'm trading intraday with you guys, that's where I feel like I need more of the granular stuff, because you can just completely get whipsawed out of your position and be right directionally over the week.
Yeah, totally agree. And that obviously we both agree that's one of the worst feelings, is to get whipsawed out and then the trend goes in your direction.
That's right.
Gotta wait for a better entry. There's always a better entry. Or average in or something.
There's always another opportunity too. That's actually honestly, like, when it comes to trading and markets in general, it's what attracted to me about it in the first place. You know, being an entrepreneur in the marketing space prior to all of this, building affiliate tools and ad tech tools, all that stuff changes so fast and nothing ever really lasts. There's an opportunity for a while and then it starts to dissipate and the whole industry changes. But when it comes to trading and markets, there's always going to be another trade and there's always going to be another opportunity. And it's been that way for over 100 years. So I love that. I love the consistency of it.
So here you'd be looking for an entry?
Yeah,
like to add to your loan?
To this position. I'm expecting a bounce from VWAP. We'll keep an eye on where we actually close from here. But VWAP is always a guiding principle for me. I'm pretty confident we're already in a very clear uptrend for the day. So I went ahead and added to this position right off of VWAP. It may pull back a little bit, but I fully expect buyers are going to step in from here.
Yeah, and DXY is starting to fall, so let's see.
Dollar starting to fall. Yep.
A little, yeah. Yep. Although I've been very confused about the bond market.
Yeah, what's that telling us?
It's been so like with the 30-year and the 20-year just like moving up, like we're at 5% out there. Mm-hmm. But the short-term rates are starting to fall, especially on the. Do I have the less than a year? Where is it? This is the.
Man,
yeah, the 3-month really spread. Sorry,
yeah, it was an ETF or something.
Side note: go back to Treasury yields. Go ahead, Tom.
Yeah, so we have so this is the 3-month spreads, mm-hmm. and we're negative for 3 month and 3 months, 6 months, 3 month, 1 year, 3 month, 2 year. That's bad, but we are positive on the 2-year spreads, and I don't know what to make of it because we don't usually have that. That's not usually a thing. So it's like bond yields seem too high. The 30-year, 20-year seems to be bumping against this whole 5%. It's like they're trying to keep it down below 6%. Mm-hmm. And then the short-term rates are behaving very weird and squirrely. Usually I could just use this to match it with what's going on with the dollar. And then you get a clear idea of, okay, where's capital moving? But I'm not getting that now. Even the MOVE index, if you take a look at MOVE index right now, it's low. VIX is low, NFCI is low, so I can't tell if it's bullish or not, which is annoying. You're saying Ethereum is up big?
I was just looking at I have this
Yikes,
comparison chart that I used to just sort of track all assets at the same time. It was when I was mentioning that gold is still outperforming Bitcoin this year. Nvidia is up, obviously, but I just noticed that Ethereum is just rallying right now.
Well, it's definitely going to get to 3,800, so get your bets in.
Okay, it looks like this trade is starting to turn against me a little bit. Let's take a look at what's going on. Like I mentioned, I kind of expect that we may pull below VWAP a little bit, but I definitely expect buyers to show up. If they don't, I might have to turn around again, which sucks. I hate choppy days like that where you have to keep switching bias.
Right.
Dollar's still falling.
Dollar's still falling.
Gold is slowly rising.
Wait, what does my say about the NASDAQ? Let's see.
All right, where are the buyers?
Oh yeah, my indicators are showing NASDAQ is. Oh no, that's pretty bullish. But we're in a consolidation zone, so it's literally chop all over the place.
Mm-hmm. We've been seeing a lot of that lately, where it's really hard to get a good, clean signal for the day. It kind of chops all over. I got rid of all of my historical indicators, but we've seen this before where not even VWAP gets a solid signal. This is 2 days right here of just chop around the entire VWAP. There's no way to set up a trend on these days. It just went sideways. Maybe you catch one of these quick pullbacks, but overall it was those were tough days to trade.
This is why I like looking at the previous day's VWAP, because in the choppiness they become attractors for the price.
Sure.
And And so for right now, like if I had to take a bet on NQ, I'd be aiming for a short to 2,300. Sorry, 23,000.
You mean to 23,000 from here?
Correct.
Yeah, that sounds right. That would push you back to roughly the weekly VWAP.
Right. Like over here, the same sort of thing that happened on July 6th, where it moves down to the weekly VWAP. So I always use those levels as my attractors. Even yesterday when we were talking about it, I was like, hey, I think the Nasdaq's going to fall down towards the 3-month. That's exactly where we went. We had that weird thing with the dollar that spiked, and then it came down and it moved back up. So when I'm in consolidation, that's what I actually like to trade the most. To move from VWAP to VWAP.
Okay, so the buyers started to show up now. This is what I want to see. Just took a minute and I had to wait for it.
So in a previous life, would you have closed that position out, sold that position out as soon as the price dipped below the VWAP? Or would you always have held
full
it?
candle close? That's the one other reason I wait for full candle closes, or try to as much as possible. A full candle close is going to tell the final story, and you can see here that we wicked below, but ultimately closed with this hammer right on the VWAP line before we started this continuation. So it definitely is more helpful to really confirm that price has closed, the full candle has printed, and then we can take the signal from there. But we got to pay a little bit more to know whether we were right or wrong on that.
One of my mistakes I had to like burn out of me is calling the candle pattern before the candle closes.
Right,
you look at it and go, oh no, it's clearly this is going to be a this, and then it turns out not to be that at all.
Yep.
My God.
I mean, at the end of the day, when, like, especially if you're trying to time a bottom, it's like if you're trying to just stab these candles before they close, when it finally bottoms and you're on an appropriate time frame, it's always super obvious. It's always like, oh yeah, nope, that's what it would look like if it were actually bottoming. So it's like if you, when we're just death down, 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 and you're like trying to time it, like when it finally does do the, you know, tweezer wicks on the 5-minute and it's just a explosion upwards, like you just had to wait. Just wait for a closed green candle. I feel like will save you a lot of the time. I'm just like, oh, the bottom of this red, boom, that's the one. We're gonna perfectly come. And it's just like, why? Just wait.
Yeah, exactly.
You'd rather miss it than be insanely early.
I agree. I think the open candle can often be very deceiving. You don't really know what you're looking at until it's closed. And then of course you're always playing this game though between two different forms of delusion. One is the delusion of thinking you know what the current candle is going to close like, but then the other delusion is the hindsight bias, which is to believe you saw the trend the whole time. It's a tough delusion to get through. All right, so I don't know if you guys noticed what I just did there, but I'm overlaying a scalp on top of my long position. So I have 4 M&Q long, but then I've also added another scalp trade on top of this for 15 points long NQ. Same direction. I'm not doing any inverse trading or hedging or anything like that. That would obviously break the prop firm rules. But I can take a quick scalp on NQ, add to my winning position here. Take profits pretty early on it, pick up $300, and then continue with this long hold on M&Q.
Nice.
So far, so good.
Are you in a trade right now, Trev?
No, after yesterday's near death and staring down my mortality, of being like, wow, this like I'm gonna lose $2,000. This is stupid on my IRA, like an idiot. And I made it all back, and I'm like even for the year. No, God, no, I'm done. I'm done.
Got to take a break.
And Stan's just like, oh, you're not done. You'll be back. And I'm like, maybe I'll be back on something, but like, I don't know. It's like you buy, you know, his big thing is just buying a ton of either buying shares or buying leaps, you know, years out. So I have the only position I have now, which I have way too much cash, is 2 year out leap on Google and Amazon, and 100 shares of FBL, which is like the the Facebook or the Meta leveraged shares or whatever. But no, I mean, it's just, I said, as I was, you know, we bounced, and obviously our entries were garbage coming into the downtrend or whatever. But I was just like, people like didn't make it out of this, right? Like, I'm not the only one that like didn't make a ton of money on this V-shaped recovery. And he was like, no, people were probably trying to catch 0 days or week out, you know, on this downtrend. So I'm back to where I was before I started. So I'm happy. So no, I'm not in a trade today. I'm working. I have a job. I work here, man.
Not a lot of places where you can get paid to trade, though.
No, that was what I said. I said the joke was, I confessed to Mike that like I have a very love-hate relationship with trading. With prop, it's less so. But I was kind of like, you know what, maybe it'd be good to take a couple weeks off and just kind of like get my mind right. And then the next day was like, hey, we're gonna live trade on the show. Do you think you can live trade? And I was like, dude, like you're like my therapist or like my sponsor, and we're like, hey, let's go get some shots. It's like, no,
I'm the worst sponsor ever.
yeah, come on, man, it'll be fun. $1 beer night. We're like, no.
That's funny. All right, so I picked up $300 or $270 across all these accounts with that little NQ scalp, and we're up $280 on the M and Q position as well. So up $380, $400 on all the accounts at the moment.
So now you got to be more conservative with that longer term long in order to not give back those gains.
Yeah, it just makes me feel more comfortable to hold this position longer, knowing that the position size is much smaller. So, you know, the market can do anything at any point. Anything's possible. And if it whipsaws against me here, at least my risk is still well managed. It's what I like about the scalps. You know, I'm only taking them for very small runs, 15 to 20 points at the most. It's obviously not against... for many of the terms that I've read with the prop firms, they don't like it if you're in 5-second trades or less. And most of my scalps are, you know, far longer than that. 1.5 minutes, 2 minutes, 2.5 minutes. I think that one right there was 5.5 minutes. So, you know, they're not very, very quick micro scalps, but they're just short enough to where I know it's a pretty high probability move. I feel good about it. I can add leverage to that small gap of price. And then still hold that long position for the rest of the session here, or for as long as the trend continues. And so far we're above VWAP. We're still continuing in the bullish direction. Everything looks strong. Everything looks good. There's no reason to get out yet.
Got it.
Shoot, even looking at the chart here, this is starting to look like a fib extension. Let's look at this retracement here. So it pulled back, barely touched the 618. It did go a little bit further than the 0.5. So I want to see if this extension puts us a little bit further. So it'd be from here to here to here. It's not a very big move. Probably miscalculating this too. We'd have to take a look at the longer term Elliott wave. But if we do complete this extension, it would push us closer to 23,246, which would actually be a new all-time high for the day. So I'm not sure. I'll go where the price goes. Let's put it that way.
Right. Vibe trading at its best.
It's not vibe trading, man. Come on.
Sounds like vibe trading. Right.
And we haven't had any like really good mean reversion trades in a while. That would be another one I'd love to showcase because it's a very different trade for me. There is, when it comes to mean reversion in general, I don't have stop losses on those either. Because in theory, if price starts to pull back even further, I'm going to want to add to that position. So I'll start with one MQ, wait for price to move by another deviation, add to that position, and then wait for price to revert. But it's got to be a pretty big pullback, and we just haven't seen any of those yet. If we can finally get to a point where the bears are taking control of the longer term trend, then there's probably some decent mean reversion trades in there. But at the moment, I mean, just look at this bullish setup. This has just been crazy since April.
Markets go up and to the right.
Markets go up and to the right.
I was so against that for so long because all the money I ever really made, the big money, was always on the short side.
Yeah, same here. It's taken me, I had to do it today. I'm sure you guys saw it. I had to flip my chart upside down so I would flip my bias because I just love the short selling. But no, I have to stay more on the bull side than the bear side. And if I am on the short side, I'm always waiting for the bulls to just step in and run me over.
I spent 2 years just like, okay, I want to understand the dynamics of the institutional money within the markets. I just want to know what's going on over there, because they can't be doing what the retail traders are doing. Like, they're not on YouTube looking for technical analysis, like training, or like they're not doing what we're doing. So they're doing something else. And if you have to scale in, $3 billion into the market, you have a completely different view of what you're doing. Just to understand that. And so then you take a look at that, you take a look at the governments that are participating, sovereign wealth funds, hedge funds, the whole thing. All the big players have an incentive for the market to go up and to the right. None of them have an incentive for it to go down, like longer term.
Right.
And I go, why am I betting against the government? Why am I doing that?
Especially now that the Fed has its favorite tool. So
right.
We talked about this on our shows and after hours in previous episodes. The pullbacks in markets aren't nearly as big as they used to be. We have faster mean reversion on the daily and weekly time frame for the S&P 500 than ever before. The idea of like another 10-year
bear market,
decade, I just don't think it's there anymore. Now, especially now with retail involvement. The buy the dip strategy is one of the most common ways to look at the markets, and people just keep dollar cost averaging into dips. So it's just added a lot of stability and liquidity to the market that makes it much harder to see those types of winters. That said, it would take a lot of poor earnings reports for us to get back into that territory again.
But even then, all we would have is the dispersion, right? You'd have the mega caps taking all the market share, still going up, while all the lower ones go down. Even Russell's down now versus the NASDAQ and the S&P. Like, you'll just have this K-shaped. So as long as you're betting on the big dogs, you're betting on performance, you're betting on that these things need to go up and to the right, that's what's going to happen. Plus, you have the thing where the population, like, there's no other side that's clamoring for the stock market to go down. There's not even a populist call for that to occur. Even from
a global investing standpoint, they need the U.S. market to rise. There's no question about it. Yeah.
So it's like, why ever bet against that? Buy every dip, ride every long.
I think that's the attitude. It's what leads us to these short-term pullbacks. I mean, I guess I should have. I did have a little bit of this mentality. I just didn't think it was going to happen so fast. Going back to the daily time frame, I expected a little bit deeper of a pullback here during the Trump tariff era, and I did not expect such a wild return from here. These trading days in the beginning of April were just insane. Even crazier was I was finishing up my certification for the futures and options analyst designation, and I had to paper trade through this to demonstrate my ability to trade futures and options. I lost my ass. It was terrible. Fortunately, it didn't count against you, to actually get the final grade. You still have to just test through. But My paper account, I think I was down like 17,000 on a $100,000 account. So
it's just the idea that, so there, whether you, let's say you did have the short bias, but you focus on, okay, I'm going to make sure I have options or a poly market bet or whatever, betting on the V recovery. Those positions made so much money.
Yeah, right.
Because the premiums you weren't even paying a bunch for the volatility because the premiums were so much lower. Or even if you go for the event based stuff, it was like what, less than 5% odds that the markets would get to the levels that you're talking about, and so you're paying so little for such gain. Like I think on that kind of you're talking about in that area, I made 4x on my poly market bet that
fantastic
would go back up. It was like, and I'm looking at the markets and go, this is easy money. Like obviously the likelihood is that, or rather the odds should be more than 5% that it's going to V up. We've seen Vs since 2009. After that, after the global financial crisis, it's been Brexit Vs, China crisis V, Volmageddon V, 2018, COVID V. Like everything's being V up. Like why not bet for that? And that the market is pricing in poorly those odds blows my mind.
Yeah, no, I agree. I think I had you in my mind during that first week of April too. We had been talking a lot about the V-shaped recoveries, and I knew that the potential was there, but I still had it in my mind that we were still going to be another 10% down before we finally saw that. I knew it was going to be short term. I just didn't know it. That insane candle on April 9th, no way I could have predicted that. Early in the session, sure, the bullish activity was there. The volume showing up on the order books was incredible. But the rest of that session, I just didn't see that happening. It was crazy.
That was the birth of the taco trade, right?
Yeah.
Trump always chickens out.
Trump always chickens out.
Just birthed a new thing. Like he was like, oh, I changed my mind. Completely changed my mind. It's like, all right. Who could have seen that coming? We should have all seen that coming.
Trump is trying to change that acronym, though. I think he's going for Taft now. Trump always follows through. That's going to be the new one. That we'll see. We'll see.
I believe that
if this is the same as the testing out the leak about the 90-day pause, as far as like testing to see what the market will do, then Powell somehow, whether it's legal or not, will be forced out in some capacity. And that was the market reaction. That's in the back of my brain. I'm just waiting for Powell's gone, and I'm like, well, that's what it was. It was a teaser. Because if you look back on the chart of when the 90-day pause leak was, we went up, it came all the way back down, and then eventually when it did actually get paused, we went right back up. So I don't know. It's just not. It's the time to be safe. You want to ride and from the middle of the bus. You don't want to be at the station. And if you look at those trades yesterday when we went up and then came laser back down, almost like a shit coin, it was like, as long as you weren't longing the very tippy top, you would have been fine, I guess. But those are some of the craziest candles I've seen on NQ during the day.
Yeah, agreed there. Still about a 2.5% chance of a rate cut on July 30th. So obviously we're still paused for a bit. 50-50 chance of being a rate cut in September. But I guess we'll keep an eye on how this administration shakes things up from here. There are some initial signs, though, that inflation is inbound from tariffs. Some of the reports coming out of Morgan Stanley, as well as some of the other institutions, are starting to show that there is some price pressure there that is an early warning sign. But then again, I think we've gotten a couple of quote unquote early warning signs over these last couple of quarters, and it hasn't materialized yet.
Well, the problem with inflation is the unexpectedness of it. As long as it's expected, you don't have the volatility. And so I'm not worried about the last bout of inflation we hadn't had inflation in 40 years. Now people are like, okay, all right.
All right.
It's Heath Ledger and Batman. It's
this
that
is what
quote
you guys
I always
call inflation. This isn't so bad.
Yeah.
As long as it goes according to plan, people don't freak out.
That's right.
That's true. Okay, well, this is a very it's a very boring trend. This is again why I enjoy the short side so much. It's just a much quicker trade. I don't have to sit here staring at charts. I do need to start getting ready. Tom, you and I have a call coming up here. We're going to be talking to a platform that may provide us access to level 2 order books and the ability to write scripts and algorithms from it and send off webhooks to Traders Post. So really interesting signal source provider. We'll reveal that if the partnership looks good, but it seems like what they have is a pretty interesting platform.
Looking forward to it.
Yep. All right, so we got 15 minutes toward to that meeting. I'm going to go ahead and close the stream. My aim right now is just to hold this trade for the remainder of the session or as long as possible. I'll keep an eye on some of these little pullbacks that may occur, but this is a pretty bullish open and pretty bullish trend. I would expect it to continue to either the all-time high. Maybe we post a new all-time high today. We'll see, but I'll keep the trend as long as possible.
Beautiful.
Aventura, thanks for being here, bud, and everyone else in the stream, thanks again for following along. Cheers, everyone.
Happy trading.